Welcome back to the Investor's Library. We're diving into an ETF today that could be your key to a comfy retirement with stable growth and passive income. That's the SCHD.
Yeah, it's a good one. It's been getting a lot of attention lately.
You all have been asking for a deep dive on it, and
Yeah.
that's exactly what we're going to do. We've got all the latest research, expert opinions, all ready to go.
Awesome.
So maybe we can just start with the basics. What exactly is the SCHD?
Sure. So SCHD stands for the Schwab U.S. Dividend Equity ETF. Basically, it's all about building a portfolio of those really reliable companies, the ones that like to share their profits with investors.
You mean through dividends?
Through dividends, exactly.
Okay, so it's focused on dividends. So how does it choose which companies to include?
So it tracks the Dow Jones U.S. Dividend 100 Index, which is pretty picky about the companies it lets in. Think about it. To even be considered, companies have to have paid dividends consistently for at least 10 years.
Wow, 10 years. That's a pretty long track record.
Yeah, it really shows commitment to their investors.
That's true. So they got to pay those dividends consistently.
Yeah.
But is there anything else? Like, do they have to be financially healthy too?
Oh, absolutely. They also go through a financial health check to make sure they can actually keep those payments coming. They don't just want companies that are going to, fizzle out.
Right. So it's like a double check, really.
Exactly.
Okay, so I think we've got a pretty good handle on the how, but I'm curious about the why. Why should someone like me care about dividends?
That's the big question, right? Well, think of it this way. When you invest in a company that pays dividends, you're basically becoming a part owner, and you're getting a share of their profits directly. That's what a dividend is, a piece of the pie.
So instead of just hoping the stock goes up in price, I'm actually getting a little bit of cash back regularly.
Exactly. And that can be a really great way to build a stream of passive income, especially as you're, thinking about retirement.
Yeah, that makes a lot of sense, actually. Especially if those dividends keep coming in even when I'm not working anymore. So we've talked about how SCHD works, why dividends are so important. Now tell me, how has SCHD actually been performing? Because at the end of the day, that's what we really care about, right?
Yeah, absolutely. Performance is key. And SCHD has been doing really well, like really, really well. Over the past decade, it's delivered, get this, double-digit returns.
No way. Double digits.
Yep, averaging over 11% annually.
That's pretty impressive.
And get this, it's done even better in the last 5 years, like exceeding 12% per year.
Wow. So it seems like it's been gaining momentum.
It really has. And here's the kicker. On top of those returns, it's offering a dividend yield right now that's close to 3.5%.
So on top of the growth, I'm getting almost 3.5% back in dividends each year.
Exactly. I mean, let's say you invest $1,000, you'd be getting around $35 in dividends per year, just from that.
Not bad at all. Not bad at all. So it sounds like SCHD is a pretty solid choice for dividend investors.
Yeah, but there are a lot of ETFs out there that focus on dividends, right?
Yeah, true. So how does SCHD stack up against the competition? Like, what are some of its main rivals?
Well, some popular options are like the Fidelity High Dividend ETF, FDVV, the iShares Core Dividend ETF, that's DDY, and also the WisdomTree U.S. Quality Dividend Growth ETF, that one's DGRW.
Okay, lots of choices. So how does SCHD compare? Does it have any advantages over these others?
So what's interesting is that they each kind of have their own approach,
Yeah.
But what makes SCHD really stand out is that it's aiming for that sweet spot between high dividends and growth potential.
So it's not just chasing the highest yield possible. It's also looking for companies that have room to, grow and increase those dividends in the future.
Exactly. Like if you think about DVY, for example, it has a really high dividend yield.
Yeah.
But the companies it holds, they might not have as much potential for growth. On the flip side, you've got DGRW. It prioritizes growth, but its current yield is lower. So SCHD is right there in the middle, trying to find that balance.
Yeah. It's like, it's not just going for the quick win. It's thinking about the long game.
Exactly. It's all about sustainability.
Okay, so it seems like SCHD is taking a more, quality-focused approach.
Yeah, I'd say so.
But what does that actually mean? What are some of the factors that determine quality in this context?
So one of the biggest things they look at is a company's free cash flow.
Free cash flow. Now, remind me again, what exactly is free cash flow?
Sure. Think of it as the money a company has left over after they've paid all their bills and invested in their own growth.
Okay.
So it's like what's really available to, pay out to investors.
Oh, okay. So it's not just about how much profit a company is making, but how much that profit is actually free and clear. The money they can actually give to us, the investors.
Exactly. And the more free cash flow a company has, the more secure those dividends are. You know they're not going to have to cut them just to keep the lights on.
So it's like a measure of how easily they can afford to pay those dividends, even if things get a little tough.
Exactly. That's the idea.
And I imagine that focus on quality companies also influences how often the SCHD is like buying and selling stocks, right? I mean, they probably don't want to be trading all the time.
You got it. You're right on the money with that. Because they are focused on those steady, reliable companies, they tend to hold on to them for longer. And that's something you can see in its low turnover ratio.
Okay, low turnover. Now, what does that mean for investors like me?
Well, a lower turnover means fewer transactions. And fewer transactions means lower costs for you.
Okay, so that's good. Less money going to fees.
Right. And it can also mean potentially fewer taxes.
Taxes, how does that work?
Well, when you buy and sell stocks, you sometimes have to pay taxes on those trades. So the less you trade, the less you might owe.
Oh, I see. So it's not just about the dividends, it's about keeping more of what I earn.
Exactly. And something else that's interesting? I've heard SCHD is known for being tax efficient.
Tax efficient, what does that even mean?
So some investments can generate more taxes than others,
Right.
but SCHD is structured in a way that aims to minimize those taxes, especially on your dividends and any profits you make when you sell.
Okay, that's good to know,
Yeah.
especially if I'm investing outside of, like, a retirement account.
Right. That's when it really matters.
Okay, so we've got quality companies, solid performance, low costs, tax efficiency. It sounds pretty good. But I'm curious, like, what kind of companies are we actually talking about here? What industries does SDHD tend to favor?
Good question. If you were to peek inside SCHD's portfolio, you'd see it leans towards sectors like technology, consumer staples, and healthcare.
Okay, so things that people are always going to need.
Exactly.
Like, even if the economy is uncertain, people are still going to need technology. They're still going to need, their everyday essentials, groceries and stuff, and they're still going to need healthcare.
And
Right?
what's the idea? These sectors are considered more, financially resilient, meaning they tend to hold up better during those tough times. Now, how this plays out in 2025, well, that's something we'll want to explore further, especially with the economy facing some potential headwinds.
Yeah, that's a really good point. So this focus on those specific sectors, how does that compare to its competitors? Do they all focus on the same industries?
That's where you start to see some real differences in strategy. Like, for example, an ETF like the Vanguard High Dividend Yield ETF, VMA, it has more exposure to financials, which can be a little more volatile, especially in a shaky economy.
So SEHD's focus on those more stable sectors, could that be like a form of protection?
Potentially, yeah. It could offer some extra cushion if things get bumpy.
Yeah.
But that's not to say it's without risk.
Right, of course. But I do like the idea of having some stability in my portfolio, especially if I'm investing for the long term.
Yeah, I think that's a really smart approach to investing.
Okay, well, this is already super interesting. So let's get into the nitty-gritty of actually investing in SCHD. What are some strategies people can use?
Sounds good. Let's talk strategy. So one approach that's really popular, especially for beginners, is dollar cost averaging. You might have heard of it. It's called DCA for short.
DCA, yeah, that rings a bell. Isn't that the one where you invest consistently, like
Yeah.
regardless of what the markets do?
You got it. Instead of trying to time the market perfectly, which, let's be honest, is really hard to do.
Yeah, even the experts get it wrong sometimes.
Exactly. So with DCA, you just invest a set amount at regular intervals, like maybe every month.
Oh, okay. So even if the market takes a dip, I'm still buying shares of SCHD.
Yep. And that can actually be a good thing because you're potentially buying those shares at a lower price.
Right, so it kind of averages out over time.
Exactly. It helps reduce your risk that way because you're not putting all your money in at once when the price might be high. And for an ETF like SCHD, which is really designed for the long haul, DCA can be a great fit.
Okay, DCA makes sense to me. But where should I actually be holding these SCHD investments? Like what type of account?
Well, if you're investing for retirement, a Roth IRA could be a fantastic option for holding your SCHD.
A Roth IRA, yeah, that's the one where I can potentially withdraw my earnings tax-free in retirement, right?
Exactly. With a Roth IRA, you contribute after-tax dollars, and then all your qualified dividends and any capital gains, they all grow tax-free.
So all those dividends from SCHD, they just keep compounding year after year without the IRS taking a cut.
Exactly. That's the beauty of it. It's a really powerful wealth-building tool, especially when you combine it with a solid dividend-paying ETF like SCHD.
That is super interesting. So with SCHD and a Roth IRA, I'm getting those regular dividends, potential growth, and tax advantages when I retire. It sounds like a pretty sweet deal.
It really can be, especially for long-term investors.
Are there any other situations where SHD might be a good fit, like maybe for people who are already retired?
Absolutely. Even if you're already retired and you're looking for that consistent stream of income to, supplement your pension or Social Security.
SCHD could still be a good option.
Yep, those regular dividend payments could be a really nice addition to your portfolio.
It's like getting a paycheck from your investments every quarter.
Exactly. It can help you maintain your lifestyle in retirement.
That's really cool, actually. But, dividends aren't always guaranteed, right? Couldn't company decide to just cut them or stop paying them altogether?
That's true. No dividend is ever absolutely guaranteed. Things can happen.
Right.
But remember, SCHD is focused on those companies with a really proven track record of dividend payments. Strong financial health, too.
So they've been paying dividends consistently for years.
Exactly. And they've often increased those payments over time, so it shows a real commitment to sharing those profits with their investors.
Okay, so while there's always a possibility of a dividend cut, SCHD's selection process is designed to make that less likely.
Right. They do a lot of the legwork for you, trying to pick those companies that are going to be reliable dividend payers.
Okay, so it sounds like SCHD really does offer a lot of potential benefits for investors, whether they're just starting out or they're already retired.
Hmm.
But I know every investment comes with its own risks, too. What are some of the risks associated with SCHD?
You're absolutely right. It's always important to think about the risks. And with SCHD, one of the primary risks is simply market risk.
Okay, market risk. What does that mean?
Well, remember, SCHD is an ETF that holds stocks, right?
Yeah.
And the stock market as a whole, it can go up, but it can also go down, sometimes pretty dramatically.
So even if SCHD's underlying companies are doing well, like a big market crash could still affect its price.
Yeah, that's right. Market forces can really impact even the most carefully selected investments. Another risk to consider is concentration risk.
Concentration risk. Now, does that have something to do with the fact that SCHD leans towards certain sectors, like technology, consumer staples, healthcare?
You got it. SCHD is diversified across different industries, but it does have a heavier weighting in those particular sectors.
Right.
So if those sectors were to underperform, for whatever reason, it could drag down SCHD's overall performance.
Oh, okay. So it's like putting a few extra eggs in those baskets, which could be good if they do well, but riskier if they don't.
That's a great way to put it. It's a trade-off to think about. And then, of course, there's interest rate risk. When interest rates rise, investors tend to move their money towards fixed income investments, like bonds.
Because they might offer higher yields than they were getting before.
Exactly. So that shift in investor sentiment could lead to lower demand for dividend-paying stocks, including those held in SCHD.
Ah, okay. So it's not just about what's happening within SCHD itself, it's about the broader economic environment.
Exactly. It all plays a role. And then, there's always the wild card, those unexpected events, geopolitical stuff, recessions, natural disasters. Those can all impact the market and, in turn, affect SCHD's performance.
Yeah, it's like you can never fully predict what's going to happen.
That's right. There's always some level of uncertainty.
So it sounds like while SCHD has a strong track record and a really smart approach, it's not totally immune to the ups and downs of the market.
No investment is. But being aware of those potential risks can help you make a more informed decision. You can weigh those risks against the potential rewards.
That's a good point. I think understanding those risks is just as important as understanding the potential benefits, maybe even more so.
I agree. It's all about making informed decisions. And it's interesting, SCHD's philosophy kind of challenges some of that conventional investment wisdom.
How so?
Well, it's really about finding those quality companies that can provide a steady stream of income, potential for long-term growth, rather than just chasing the latest trends. It's a different approach for sure.
It's like a reminder that slow and steady can win the race.
Yeah, especially in the world of investing. But here's a thought-provoking question for you. As we move further into this digital age, with all the technology and changing consumer behaviors, can SCHD's focus on those more traditional sectors like consumer staples continue to deliver those really strong returns? I mean, it's something to think about.
That is a great question.
Yeah.
It really makes you think about the balance between sticking with what's proven and, adapting to a changing world.
Yeah, it's a real crossroads, isn't it? SCHD's got this proven approach, but the investment world is changing so fast.
It is. It really is. And it's a challenge every investor has to face. How much do you stick with what's always worked?
Yeah.
How much do you go after the newest, shiniest thing?
Right, right. Because there's definitely that pull toward the new, especially with tech moving so quickly.
There is. Like if someone's really comfortable with risk, maybe even excited by it, those growth-focused tech investments might make sense for them.
Yeah, they might be looking for those huge gains, even if it means more ups and downs. But for someone who's more focused on stability, especially as they get closer to retirement, SCHD's strategy, that slow and steady approach, it could be a much better fit, especially as one part of a well-diversified portfolio.
So it's not about one being better than the other. It's about finding what works best for you.
Exactly. What's your risk tolerance? What are you hoping to achieve? That's what matters.
And it probably changes over time too, right? Like what I'm comfortable with now might be different in 5 years.
Oh, absolutely. It's an ongoing process. You have to adapt.
Because what worked in the past, it might not be the winning formula in the future.
Exactly. Things change so fast, especially these days. That's why it's so important to stay informed. Keep learning. Be willing to adjust your strategy as you go.
And that's what we're all about here at the Investors Library, right? Giving people the information they need to make smart decisions about their money.
That's what we try to do. Give you the knowledge and the tools to make the best choices for you, for your situation.
It's like we're all on this big investing journey together.
We are. And it's a pretty exciting journey, even with the ups and downs.
It is. Okay, so as we wrap up our deep dive into SCHD, I want to leave our listeners with something to think about, something that really stuck with me. We're in a world where things are constantly changing, right? New technologies popping up, old ways of doing things becoming obsolete. So in this kind of world, could SCHD's strategy, investing in those companies with a proven track record, could that actually be the key to navigating all this uncertainty? It makes you wonder.
It really does. And I think that's the perfect note to end on, because ultimately, the best investment decisions, they're the ones you make with a clear understanding of both the potential and the risks. So do your research, think it through.
Yeah.
And choose investments that feel right for you, for your goals.
Couldn't have said it better myself. Well, that's all the time we have for today. Thanks for joining us in the Investors Library. We'll be back soon with another deep dive into the world of investing. Until then, happy investing.